Good morning, everybody. Welcome to Zoe's Treasures. My name's Tracy. I'm here with my husband, Noel. He's doing my camera work for me. Couple of quick things I'd like to start off all of these chat shows with. One, this is an unusual announcement, but ignore anything in the auction tab. I am not auctioning anything. I just forgot to clear it out. Plain and simple, and it's just left over from my last show. So just ignore that. We're not auctioning anything today. We're just chatting. Two, I did not put my show notes up, but as usual, just a disclaimer that I can't talk about anybody specific or give specific advice. I talk about tax law, generally accepted accounting procedures, accounting principles, some of the best practices, but everybody's situation is unique. There's always circumstances to everybody's situation that are unknown to me. So while I am happy to try to answer any questions that I can, I can't give like specific personal advice. So those are just kind of my disclaimers. And with that, we're going to move right along with our tax and accounting show. It's a new year, a new chance to do things differently with your business and your books. So that's exciting. I thought the focus of today's show, we would talk a lot about 1099s because we are all anxiously awaiting our 1099s to come in so we can get moving on doing our taxes. How you enjoy taxes. I know it's like a pain point and a stressor for most people. But before we do that, throughout the month, I like to jot down any questions I either see on Facebook or maybe in different shows. I never mention names, but I do kind of jot them down and I bring them to you because I figure if one person asks, maybe other people may have those same questions. So I had 4 questions that I saw in the past month that I wrote down. The first one is, it wasn't a question, it was a statement that somebody made. They said, giveaways are a tax write-off. Great, yes they are. However, it's that mindset that I want to address with that. Not whether giveaways are good or bad, it's up to you. You do what's right for your business. At the end of the day, though, yes, giveaways are a tax write-off. They are an expense to your business. So I hate the term write-off. Giveaways are an expense to your business, so they do reduce the profit of your business. But like I'm saying, they're an expense to your business. Don't do a giveaway thinking it's free, like it's free money. It's not. It's free to the person receiving it, so it's great as a buyer if you give me something, yay. But as the seller, it's an expense to your business. So just keep that in mind. Just because it's a tax write-off doesn't mean that there is no business consequence to them. So when you're evaluating giveaways, just do it on the mindset of whether that's an expense that you want to allocate for your business or not, or would you like to use that money instead of a giveaway in another manner. So that was the first one. And you guys, as always, throw any questions in the chat. You'll see me look up pretty frequently because I'm monitoring the chat up here, and my husband's behind the scenes kind of typing some stuff in too. But any questions, feel free to type them in at any time. Let's see. The second question that I heard this month is, do I have to have a business name? Now, that's not necessarily tax or accounting, but it's a great question, and that's why I wrote it down. And really, that depends. It's kind of up to you and what are your goals of your business. So if you're new to my show, I like to use myself as an example a lot just because, I know all the facts about me and it's easy to make myself an example. I don't have a business name. We go by Zoe's Treasures, which is technically a business name, but it's not a registered name. I haven't registered it with the state. It's not a legal name. It is a username on the various platforms that I sell on. That's all it is. Zoe T, Zoe's Treasures. I file my taxes. I am a sole proprietor. So my taxes are filed under my legal name, mine and my husband's as a married couple. So in my circumstance, it doesn't make sense to have or to need a business name. I can get a bank account just using my personal name and signify that as a business account. I don't have a physical location. I don't need liability insurance. So there's just not a lot of reasons for me to have a legal business name. Or even a DBA, which is doing business as. So let's talk about those two kind of separate things. A legal business name, you create a legal entity, an LLC, an S Corp, a corporation, any legal business entity, you give it a name. Then you absolutely have to have a separate name. I mean, if I wanted to make it, my name, I could, but it is considered a separate entity. If you're just a sole proprietor, it's just you. You don't have to have a legal business name, but you could have a DBA, which is a doing business as. And I see a question. I'm going to get right to that in 1 second. You can have a DBA, which is a doing business as, and that's just telling the state you live in, hey, I haven't set up this whole legal entity, but I don't want to use my full name. I don't want to put my full name out there to the public all the time because of, all the weirdos that are out there. So I'm going to use this name as my business name, as a DBA. So you can go that route. Let's see, a couple of questions here. I'm in New York, even first off, my bank wants a business certificate to open a business account, not just another personal account. And that may be in the state of New York. I'm not familiar with each individual state's regulations. I am a licensed CPA in the state of Maryland and Pennsylvania, formerly licensed in Florida and Georgia. Those are the states I'm most familiar with. But it could be. You can open another personal account, though, I would think, and still use it as a business account. You just don't call it a business account. Let's see, 9 Dimes. Legal business name helps you get business lines of credit. Absolutely. If you are big enough or at that stage where you need to get a business line of credit, then you probably start to I'm tripping over my words. Start to think about formalizing yourself as a legal entity. So I think it really depends. What are your business goals? Does the IRS view that as okay if I do that, so I don't have to go to the county for a certificate? It is fine. If you just do business under your own name, you're a sole proprietor, that's totally okay. You report it on your tax return. The IRS really doesn't care if you're a business or you're a sole proprietor, like a legalized, like a formed LLC. As long as you're reporting taxes in the manner that you're supposed to report, that's all the IRS cares about. Let's see. I want to go back to 9 Dimes. Legal business names help get business lines of credit. And that's kind of where I was going with this. It's what are your ultimate goals in business? Where do you want to go? For myself, I'm never going to go past a sole proprietor, at least at this time in my life. I have a regular 9 to 5 that I do. I do reselling in the evenings and on weekends. It's not something that's large enough for me yet. I'm not making the revenue enough where I think I need to make this a full-fledged business. I would love to have a booth at an antique mall. If I get to that point, then maybe I would. However, those of you, maybe you're reselling, this is your full-time. This is your 9 to 5, which I know is not just 9 to 5, it's a 24-hour job. And that's all you do? This is your business? Yeah, maybe you really do need to formalize, create an LLC, an S Corp or corporation, whichever your CPA tells you and works out would be the best benefit for you. So it goes back to what are your goals? Where are you going with your business? What works best for you? I see that a lot, and I think I addressed this in the last show, I see that a lot that I got to get an LLC. You need to be an LLC. And even if you go on some websites, you'll see, create your LLC now. Think it through before you do that. That creates a whole lot of complexity just in itself that a lot of times is not needed if you're just a sole proprietor. You're doing this kind of on a part-time basis. But again, that's an individual decision. You have to evaluate all the facts and circumstances of your decision of where you are now and where you want to go. Another question came in. How do you handle taxes on an item that you've sold, but you've had for over 20 years or that was gifted to you? Great question. So we talked a lot about this in the last show. So did I skip a question? Oh, my husband says. Oh, I did. I got that one. Sorry, my husband's making sure I'm not missing questions. If you have a personal item, so we have 2 scenarios here. You can have, grandma tragically passed away, gave you a bunch of items. It's came in your inheritance, or maybe they're just been family heirlooms, been in the family for a while. They're in your possession, and you've decided, you know what, I'm downsizing. It's time to sell them. That is not inventory. Those are personal possessions. Those are recorded as a capital gain or loss. Think about when you purchase a stock or bonds, capital gain or loss on those, it's the same concept. It is an item that you're either selling for a profit or a loss. Now, there's limitations on that where you can't necessarily take a loss on a personal item, but you do have to report the gain. For instance, maybe there's a vase, family heirloom. It's been in the family, let's say in this case, for 20 years, and you're at the point you're like, I got to sell it. I don't want it for whatever reason. And you sell that. You make $500 from it. Maybe you purchased it 20 years ago for $100. You have a $400 profit. You do need to report that. Now, does Whatnot, and we're assuming you're selling this on Whatnot, do they know that? Do they know when they send you your 1099K that this item was a personal item? They don't have a clue. They have no way of tracking that. That's up to you. That's why you keep good records. So you have to make sure that you're reporting in the correct way. You'll report that on a form 8949, and it flows through to what is then your Schedule D on your personal tax return. So your inheritance, your personal type items, those are different than your inventory. And when I say inventory is what you buy to sell. I buy something, I'm going to Goodwill, I'm going to thrift stores, I'm going to auctions, estate sales, whatever contacts I have in order to get my inventory. I'm buying that with the sole intent of reselling it. I keep track of it, and then I resell it in the course of my business. That's inventory. That's reported on your Schedule C as part of your inventory. So kind of two separate things. But we go back to Whatnot doesn't know the difference. They're going to send you a 1099 for the total sales. They won't know the difference. Is Whatnot sending the 1090K? So we had another question. It got muted because I think it mentioned another platform, but that's okay. Is Whatnot sending the 1099K, or is your payment processor going to be sending that to you? Whatnot should be sending that to you. Now, if you had other activity through your payment processor, they may send one to you. But I would expect it to come from Whatnot. So you're doing the business through the platform of Whatnot. That's where it should come from. I just checked. I didn't check this morning. I didn't have time. About 2 days ago, and I did not see the 1099Ks up on Whatnot's site yet. I'm telling my husband to hold on. He's pointing at the comments. I didn't see the 1099Ks up yet. They have till the end of January. So it could be another 2 to 3 weeks before you actually see it on there. And you will have to go and download that electronically. Let's see. Another question. Storage for overhead cannot be done for 20 plus years. Storage for overhead if you can elaborate on that question a little bit more. Storage for overhead is storage for your inventory, I'm assuming. It is it's tax deductible. Are there CPAs who specifically know the reselling business? Purple Pixie Finds, I'm going to answer that in just a second. So storage to keep your inventory items, completely tax deductible. If that's what you're keeping in there, you put it down as a expense on your Schedule C, if that's the form that you're filing. Schedule C is for sole proprietors. If you're going back, like into prior years, no, you're only allowed to claim the expenses for the current year you're in. Oh, I see what you're saying. You had your vase for 20 years or whatever it may have been. I used vase as an example, and something you've stored. No, to store it because that was like a personal item. So you can't really that doesn't go into the basis of that item. What would go into the basis of that item that you're selling, that personal item, would be the original cost. Selling fees could be part of it, and anything used to improve that item. So let's say it was a piano. Let's just say you've had a piano for 20 years. Most of that time it's been in a storage unit because your home wasn't big enough to have it. But you thought about you were going to play it. You had somebody redo all of the keys on the piano. You improved that item. Those are the expenses that can go into it, not really the storage for an item, a personal item. Let's see, let's go back to Purple Pixie Finds. I'm very new to this. Are there CPAs who specifically know the reselling business? There are. They're out there. Probably they're, I would say, far and few between, but they're getting to be more and more as the reselling business becomes a larger and larger industry. Almost any CPA, though, could help you. I would just ask them some general questions. The whole concept at the end of the day, the way you file taxes, Any CPA that specializes in tax, because CPAs can have various focuses, various niches that they are in, but any CPA that does taxes, they should be able to help you. Just ask questions of them, like, hey, do you have resellers? Or how many tax returns do you do a year? How many years have you been in business? What states are you licensed in? Also, every single state, you can go to the professional board, whatever the state's boards are called, where they get their CPA licenses, and you can see if there's any complaints against them. So before you hire a CPA, there's a way to go and see, are there complaints against a CPA? So I would definitely always check that out. Let's see. B. Haynes, how does filing as an LLC help with taxes? It doesn't necessarily, I would say, help with taxes. You're still filing at the end of the day. Your revenue is your revenue and your expenses are your expenses. It's going to come out to the same number. Your net profit or your net taxable income is going to come to the same number. An LLC is a business structure. So it's a limited liability corporation or an LLP, limited liability partnership. You can be an individual and create an LLC. You can create an LLC with other people. The LLC is just that business shell. It offers a shell of protection. So, and it also offers the benefits of having that business. As Nine Dimes pointed out earlier, if you need to get like a line of credit, you usually need a business to do that under, for a business line of credit versus doing a personal line of credit. An LLC also offers some legal protection in the sense that you have an entity that's separate from your personal. So you have this LLC over here and you're personally over here. If you are doing a business, you have something that you need some type of liability. People are coming into your home, or you have a store, people are going to your storefront, or you're doing something that puts you that maybe puts you in a position where you can be liable for any type of injury or damages or something like that. That may be a reason you need an LLC, and then you get insurance that separates your business from your personal. So it kind of protects those personal assets, your home, your vehicle, your bank accounts, your retirement, etc. Those of us who do not have an LLC, if we were to be sued, they sue me for whatever reason. They would sue me personally, which means all of my assets are at risk. Now that alone, some people will freak out and say, oh my gosh, I need an LLC because I can't put my house at risk. But think about your business. Think about what exactly are you doing? I'm reselling from my home. Nobody comes here. I don't give out my personal address for people to come to my home. I don't have a storefront. My liability is very limited. My liability as a reseller from my home, it doesn't extend beyond like normal day-to-day life. So I don't find it necessary to have an LLC. You may need an LLC, like I said, for some of the other reasons, if you're doing things that open you up to a liability. As far as taxes go, you have to file a separate tax return if you're an LLC. It actually complicates it, adds a whole nother step. So you file a form, what's called a Form 1065 for an LLC. So I could be a single member, just me, Zoe's Treasures, in an LLC. I have to file the tax return, my 1065 for my LLC. All the same concepts apply, all the same types of expenses, what's required, what I consider revenue, how do I account for my inventory. It's all the same in an LLC. But I file that tax return, I issue a K1. Now that K1, I have to put that on my personal tax return. And I'm going to go back and correct something I just said here in a second. So if you're an LLC, you have to file the LLC and your personal tax return. Let me make a correction. A single member LLC, like I said, just me, single member LLC files on their personal return. You don't need the extra 1065 form. When you have more than one person, not counting your spouse, you and your spouse are considered one. When you have more than one person in your LLC, then you have to file this separate 1065. So I hope that helps. I don't think there is it helps with taxes. I mean, it's another tax obligation that you have. An LLC is more of a business protection. Another question. My husband claimed, when you sell on Whatnot, let me go up. I'm sorry, I'm trying to catch him in order. When you sell on Whatnot as a sole proprietor, do you need to pay taxes every quarter? Great question. It depends. If you take nothing away, accountants love to give you the answer, it depends, because really it depends on your situation. How much money are you making? The IRS says, and I'm going to simplify this, I'm giving you the very high level, simple kind of explanation on this because I don't have all the exact number and details written down in front of me. But the IRS says last year in 2023, because we're right now still we're about to file our 2024 taxes. So in 2023, your taxable income was $100,000. Paid taxes on it 2023. Okay, that's done and over. In 2024, if I expect to make more, $1,000 more than that 100,000, I need to pay those taxes up front. I need to pay those into my quarterly taxes. If I don't expect to have an additional $1,000 of tax income or greater, I can wait until the end of the year and just pay it when I file my tax return. I can pay my tax liability or my tax due at that point. So it depends on how much money are you making in your business, and that's not revenue, it's net. Revenue minus expenses equals net. What is your net income that you're going to be taxed on? And then what does that tax become? So then multiply that by your tax rate. Is that $1,000 or more? The other way to do it, if you are not reselling full time, you're doing this as a side hustle, or trying to, grow it on the side. You have a W-2 job, you have an employer that gives you a W-2, up what you're putting in on your W-2. As long as you're putting in enough money, the IRS doesn't care where it's coming from. It doesn't care if you're writing that check quarterly or it's coming out of your paychecks from your other employer. So you kind of have some options on that. You need to look at last year's tax, look at what you estimate this year's taxable income to be, and then what that tax is. And if it's over $1,000, you need to figure out a way to pay a little bit more in, whether that's through a W-2 income or paying it quarterly. Let's go back and see. My husband claims me on our taxes. Will he still be able to do that if I have a seller income? So actually, this is a great point. And I see this a lot with husband and wives, where it says, oh, my husband claims me. Your husband actually doesn't claim you. You're married. You file jointly. You are equals on that tax return. You both have to sign that tax return. Now, you claim children. You can claim elderly dependents under specific circumstances. You cannot claim a spouse. So my husband and I, we file a tax return jointly. And how you could tell that top line of that tax return, it lists one taxpayer's name, which is usually the male, it's usually the husband, and then it lists wife's name as a second taxpayer. You guys are equal on that tax return. You both sign it. You're both held equally responsible for all the information that's reported on that tax return. So yes, it's your tax return too. It's not just your husband's. It's your tax return too. Your Schedule C income from your reselling business goes on that tax return, and you claim all the revenue and all the expenses on that Schedule C. The amount listed on the 1099K does not reflect the fees taken out. Does that reflect the fees taken out, or do we need to figure that out? It should not reflect the fees. It should be gross. So that amount should be the total amount that you earn. So I sell something on Whatnot for $10. They take, I don't know, 80 cents, whatever it is. I'm just throwing numbers out there. They take 80 cents. They're going to say I made $10 because that's what I made. You have to be calculating those fees. So you should be tracking that type of thing on a regular basis. Daily, weekly, monthly, whatever works for you. You should be tracking what your gross revenue is and then what your expenses are. The fees are just another type of expense. If you sell personal items, used clothes, furniture, blah, blah, at a loss or the same amount you paid, how do you file this? You cannot take a loss on a personal item. They don't allow you to take a loss on a personal item. There's some minor rules on that, but it's not like business where I can file my tax return on my Schedule C. I can file my tax return and say I have $10,000 of income, but my expenses were $12,000, so I can claim that $2,000. You could take some loss, but it's not. It doesn't allow you the same flexibility. There's a lot of intricate rules around that. Let's see, embarrassed to say, I have inventory I bought years ago and inherited now. Don't have a lump starting value. Too hard to determine now. How do I handle? Do it the best of your knowledge. Recreate it to the best of your ability. That's all you can do. If you don't have records of it, it's to the best of your ability. You can look at inflation rates. You can just say, you know what? I have a $100 vase. 20 years ago was probably worth 10. It was probably purchased new for $10. If you inherited, now inheritance is different. So let's talk about if you purchased it, you don't have a receipt, you just kind of do your best and maybe make a little note on how you came up with that. As long as you're being reasonable about it and you're ballparking it, you're being very conservative in your best guess, your best estimate, the IRS probably isn't going to give you a hard time about it. But if if you have a vase that's worth $100 today and you say, oh, I bought it 20 years ago and it's worth $500, the IRS is going to be like, really? Like, how did that happen? Unless it's really something that you can prove has declined in value. I mean, so just take your best guess. There is a second part to that question. Oh, inheritance. If you inherited something, the basis is the date that you inherited that item. So grandma may have bought it for $10, but if I inherited that item last year, it's at the date of inheritance, it's valued. Do I have to do an entire starting value or just value each as I sell? So each item as you sell, so you should have like, if you're talking personal items, I would just do it each as you sell it, unless you have a large amount. I'm assuming that you have 1 or 2 heirlooms that you're selling. That's easy to do. If you have a whole bunch right now, I would just get it over and done with. Figure out what your starting values are. Kind of keep a list of that somewhere, whether you use Excel or something else. Do it once, get it done with. So that's really what works for you. If it were me, I would rather just have to go through that exercise one time, figure out what personal items I'm selling, figure out the values of those and move on. But I mean, if you just want to do it as it sells, you can do it that way too. Let's see. Trying to see if there's any more. I don't see any other questions right now, but please keep putting them in there because I'm going to keep answering them. I'm just going down the list of what questions that I've seen throughout the month. Let's see, here's another one. Is it true if you live on a cemetery, you pay no taxes? Real question. That's a good question. That stumps me. I have never heard that. If you live on a cemetery, like your house is like on the cemetery, interesting. I'm going to look that up. Hold on. I am writing that down. Cemetery, no tax. Hold on. I know I got another question, but I'm making note. This is way too much stuff. I'm going to find out and I will message you on Whatnot and answer to that because that's interesting. I love those questions. All right. I'm going to find out and let you know. The next question. Is it better to report Whatnot sales income on a Schedule C? It's not about what's better. It's about what are you legally obligated to do. Excuse me. If you are not incorporated as a business, if you're not structured as an LLC, a multi-member LLC, S Corp, or a corporation, you have to report it on a Schedule C. So you have to report your business income on a Schedule C if you are a sole proprietor or a single member LLC. That's what you use. So it's not really like better or not better. It's just what are you legally required to use. Let's see, another question. Oh, this is a good one. So this totally relates direct to taxes. The question that I saw come up during last month. You can use, is more of a statement. Somebody was saying this to somebody else in a show that I was watching. You can use cash basis for your taxes so you don't have to track your inventory. Oh, my blood boils as a CPA when I hear that. So there's some truth to it. The person wasn't wrong. The person was 100% correct. But let's talk about this. If you're to look at a Schedule C, next month's show, we're actually going to go through a Schedule C. This month, in a little bit, we're going to dig into more of the 1099K, and then next month we're going to talk about that actual tax form on how do you report it. I'm trying to kind of keep these a little bit timely in the order that we would do it in real life. But if you're to look at a Schedule C, one of the questions it asks you at the very top is if this is cash or accrual basis. For IRS purposes, the IRS lets you do cash basis accounting. It's easy to report taxes that way. Just makes it, if you're not into accounting, you don't want the complexities, you don't want to use your numbers for anything else, it's purely for tax purposes, by all means, you can use cash basis accounting. Cash basis accounting is 100% what comes in and what goes out is what I write down, and that's my bottom line. However, it's only good for taxes. Only. It is not part of GAAP, which is GAAP is generally accepted accounting principles. Cash basis accounting is not GAAP. It's not a generally accepted accounting principle for the real world. Do not do cash basis and then go and apply for a mortgage and say, oh yeah, I'm a reseller full-time and I do cash basis accounting. Here's my financials. First of all, you won't get a set of financials from a real CPA in cash basis. They won't do it. So cash basis, yes, you can do cash basis. Now, what is the difference here? So what does this mean? Because I know I'm talking in a lot of accounting terms. If I am doing cash basis accounting solely for my taxes, that means I have no accruals. I have no of these expenses that aren't really expenses. Let's talk about inventory. That's the easiest way to picture this. In cash basis, in the year 2024, say I spent $5,000 on inventory. Okay? I don't care how much of that I sold. I could have not sold one item, but I spent $5,000 on my inventory. If I am doing cash basis accounting, I am going to put that $5,000 on my Schedule C as my expense. Now let's take it to a different example. Let's say in 2024, I spent $5,000 on inventory and I sold some of that inventory, and I earned $3,000. So I've earned $3,000, spent $5,000 on inventory. Cash basis, I'm going to put both of those numbers on my Schedule C. However, you can clearly see I still have inventory sitting there. I didn't sell it all. So cash basis doesn't match up. It doesn't take that matching principle of accounting and match up my expense to my income. Whereas, let's go to the other side. Accrual accounting, which is an accepted accounting principle, that's what you're going to get financial statements in, will match that inventory item to your expense. So when I buy inventory, it's not an expense under accrual. It's an asset. All I've done is trade my dollar bill for some physical item. So I've taken my dollar bill, I gave it to somebody, and they gave me an item back that I am now going to sell. It's still an asset. Okay? It's not an expense. Then I sell that item. I got lucky, went on Whatnot that night, and sold it like that. Now that item becomes an expense. Now it becomes a cost of goods sold. Now I can put it in the expense. That's the matching principle. I match that expense with the income I earned at the same time. That is GAAP. That gives you true numbers. So you have the choice on your tax return, cash or accrual. Please pick accrual. You don't have to. It's your choice. Here's the problem. When you do cash, now let's talk about it this way. When I do accrual, I do that because, and not even accrual. Why do I keep accounting records? One, I got to file taxes, right? But that's kind of secondary. The real reason I do my accounting, I want to know how my business performed. I want to use that information in order to make future business decisions. I cannot make good future business decisions with crappy information. Cash basis accounting is crappy information at the end of the day. Yes, it's going to tell you what went in and what came out, but it's not going to tell you it in a way that's valuable to make those decisions. Accrual will tell you it in a way that you can then take your accounting information, look at it, and say, I bought $5,000 of inventory. I sold $3,000 of it. I still have $2,000 of inventory sitting there. Okay, let me take a look at that $2,000 of inventory. How long has it sat there? Is it inventory that I'm willing to wait on? Did I make good inventory decisions? How fast did I make that $3,000? How fast did this inventory turn over? Did I flip this inventory? That's on the revenue side. You can look on the expense side. Did I pay too much for my inventory? What profit margins did I make on that inventory item? That's what you get when you do it through an accrual accounting and a generally accepted accounting principle. When you do cash, you can't make any of those evaluations. You can't analyze the information in that way because you're not truly matching the expense to the income. Let's see. Question. That brings up my next question. Great. How does a sole proprietor protect assets if not filed as an LLC? So, good question. What assets do you need to protect? I'm assuming like a home, vehicle, no different than you normally would. If you're a homeowner, you have homeowners insurance. Inventory, you can still get some type of insurance. Maybe it's a tad bit harder. If you have enough inventory that's not going to be covered under your homeowner's insurance, check with your homeowner's insurance. Every policy is different. I am not an expert in insurance, so I can't tell you what and what isn't covered. So, but if your inventory isn't covered, you can buy additional buy additional insurance. Go to your insurance agent and talk to them. How do I insure my inventory? If people are coming into your home, why are they coming into your home? Talk to your insurance agent and find out. There's other ways to protect what you have. Now, if you have assets that are that great that you really need to separate them, I mean, I look at myself. I have a retirement. My husband has retirement. We have a home. We have vehicles. We have the normal stuff. You know, I have some collectibles that I've collected over the years, but it's nothing that needs to be further insured over and above what I would do if I wasn't reselling. Your homeowner will not cover my business activities. Okay. I would say talk to your insurance agent. See what they can offer. Now, if you feel your business activities are great enough or pose enough risk to you, then maybe that is a reason to do an LLC. I'm not saying LLCs are bad, but I'm saying just evaluate the real reasons. Don't just jump into an LLC. Like, evaluate. It's no different than any other business decision. Look at the pros and cons, look at how it's going to help you, look at what's required of it, and then make a business decision if that is the smartest decision for your business and where you want to go with your business. Let's see. For a sole proprietor, if I have two personal accounts, one used for business and one for my other bills, does that satisfy of keeping business separate from personal? Absolutely. Yeah. And even for a sole proprietor, you don't have to have two accounts at all. It's smart. It is a best practice because it makes it easier to track, right? If I have a business account or even like a separate personal account that I do all of my business purchases and expenses through, that just makes it easy to track. But the IRS doesn't care if you're using one bank account or not. You're a sole proprietor. All they care about is that you're reporting all the income properly and you're reporting the expenses properly. The IRS can care less if you paid for it on your Capital One personal credit card or your bank account. They don't care. It's about what works for you to track it. Now, as a sole proprietor, you and your business aren't separate anyways. If we're talking liability and insurance and putting yourself out there, you're one. You're not separate, so it really doesn't matter then either what bank account you use.
Thank you.
Oh, you guys are welcome. Thank you for popping in the show and hanging out, asking questions. It makes it so much better when you guys are asking questions. So let's talk a little bit about 1099Ks. I'm going to keep monitoring. If you have more questions, please put them in there. But I'm going to keep kind of just going down my list in the meantime. So 1099Ks, first of all, what's the threshold? How much money do you need to make to get a 1099K this year? They have changed it. The IRS is in a transition period. Eventually, it's going to be $600. Right now, for 2024, for the last tax year, $5,000. If you made more than $5,000 selling on various platforms, not in total, but like on each platform. So let's just say Whatnot. If I sold more than $5,000 on Whatnot, Whatnot's going to send me a 1099K. Not send it to me. They're going to put it up and I download it. If you made more than $5,000 on another platform, that platform is going to give you a 1099K. So depending on how your business operates, you may get multiple 1099Ks if you have met that threshold on various platforms. We'll look at a 1099K in a minute and just kind of see what it looks like so you can make sure, just kind of go through the various boxes. In 2025, so that's 2024, so that's a tax year we're about to file for, is 5K. This year, 2025, so you can kind of think about moving forward, is 2,500. So it's half of that. Again, the IRS is in a transition period, so 2025 is going to be 2,500, and then in 2026, the threshold is going to be $600. But you know what? That doesn't matter. I don't care what the threshold is. Yeah, it's a legal thing. The platforms have to send the 1099Ks. The IRS has this whole structure, makes you do it. But me as a taxpayer, I don't care. You know why I don't care? I have to report 100% of my income regardless. just because I make less than 5K, say if I'm on Whatnot and I make 4,000, Whatnot's going to not send me a 1099K. Does that mean I don't need to tell the IRS? Unfortunately, no. I've got to tell the IRS there are records out there to be found. Exactly, there are records to be found. I still have to report all of my income. So I can really care less who sends me a 1099K or not, because I'm doing my job as a business owner, as a sole proprietor. I'm keeping my records, I'm reporting my income, and I'm reporting my expenses. If the IRS comes knocking on my door, I can support what I have and all is good. But the reality is they will send it to you, so we have to do something with it. Okay, so what do? We take a look at it. We match up that 1099K, and I've got my notes here, you guys can kind of see them. We match up that 1099K with what our records say. Is it going to be exact? Maybe, maybe not. Is it going to be close? Probably. It just depends how you kept your records, what Whatnot has. I mean, is Whatnot going to be accurate 100% of the time? No. They're going to be pretty good. Whatnot is a corporation, billion-dollar company. They want to get this right because they can get in trouble if they send out false information. But do they make mistakes? Does something get stuck on your account by accident? Of course, things happen. I'm not saying that's going to happen, but they're humans working at Whatnot in the accounting department. I'm sure mistakes happen. So get your 1099K from Whatnot, match it up to your records. If what you show is greater than that 1099K, okay, take a look. How much greater? If I'm talking $50, $100, no big deal. If Whatnot says I made 5,000 and I'm showing I made 15,000, maybe go back and check your records. Let's see. As long as the difference between that 1099K and what you have isn't that great, don't worry about it. It's trivial. Clearly trivial. Don't worry about it. But they should be very close. Okay. So you get it. You match it up. What happens if you don't get it? Say, hey, I know I made over 5K. I didn't get a 1099. I think I should. One, I kind of don't care because I'm going to report it anyways. But you can reach out to Whatnot. Say, hey, Whatnot, I show I made over this. Why haven't you sent me my 1099K? So that's the first thing you do. What if what you get from Whatnot, that 1099K or any other platform, is incorrect? Has a wrong social security number. They misspell your name. That's probably not a big deal if it's just a letter or two. I get that all the time with Tracy being my name. I see it with EY or CY. That doesn't matter. But if your social security is incorrect, if the numbers are really so far off that you're like, Whatnot said I made 20,000 and I know I only made 5, that's a problem because they are telling the IRS that you made 20,000. So if something is not wrong or something is not correct or you don't get it, reach out to Whatnot. That's pretty much your only recourse. They will handle it. This isn't an area that they're going to play around with. This goes back to their reporting with the IRS. They don't want to get in trouble. So they will be responsive to you. So you get that 1099K. What you're really concerned about is the revenue on there. So let's go ahead and take a look at what one of these look like. So, okay. So I've just pulled this up on my iPad, and because the way the screen goes, we can only look at it one piece at a time. So in the very top of your 1099K, you're going to have the filer's name. And this is the filer's name. So this is Whatnot. So this is going to be all of Whatnot's information in that top box. All right. Or one of the other platforms, whoever's issuing you that 1099K. Then you can see in the box right underneath it, it says check to indicate if filer is that's the filer. It's saying what type of filer they are. That's all about Whatnot. You don't need to worry about it. Doesn't really affect you. And then it says check to indicate if the transactions are a payment card or a third-party network. Again, that's about the filer. You really don't have to worry about it. They know what they are. They're getting that correct. Then you get down to your part where it says payee's name. That's your information. That should be fairly correct. Now, if you moved and they got the wrong street address, no big deal. I wouldn't try to replace it for that. Really what we're looking for here is, let me see. Oh, up here at the top, if I go over, second box in the middle, payee's TIN. That's your tax identification number. If you are a sole proprietor, that is your social security number. Make sure that's right. That's what's really important that needs to be right as far as your personal information on there. The filer's TIN, that's going to be Whatnot's EIN, which is their employer identification number. Okay, so let's go back to the first column. We got whatnots information. We have your personal information. We have the payee's name, telephone number, and account number. Again, miscellaneous information may or may not be filled out. Those 2 boxes down there at the bottom are not important. Doesn't really matter if they're filled out or not. Now let's get to the meat. This is the meat of it right here. Box 1A, oops, can't see it. There we go, 1A and 1B. So 1A, gross amount of payment card third-party network transactions, and 1B, card not present transactions. That is your gross amount right there. Those 2 boxes together is your total gross amount. That's what's important. That's what you're looking at for your revenue. That's what you're matching up to your numbers, and hopefully it's pretty darn close. Then box number 3 is number of payment transactions. The IRS has been kind of changing this year over year. I think for 2024, it's if you have over 200 transactions. They're also required to issue a 1099-K regardless of the dollar amount. So they're going to put the number of transactions. That one I'm not too stressed about. If I think I sold, 5,000 transactions and whatnot says I sold 4,800, I don't care. I'm more concerned about the revenue. What's in box 1s that are going to affect me. Then let's go over to box 2, merchant category code. That's kind of in the next column there. That's a whatnot thing. It helps identify what's being sold or what's happening with that merchant. Again, doesn't affect me. Box number 4, federal income tax withheld. This is that 9 times out of 10, that's gonna be a 0. For most of you guys, well, most of us, it's gonna be a 0. Whatnot generally will not withhold funds on a 1099-K. They're not gonna withhold funds. There are certain circumstances where they are required to withhold funds based on IRS rules. They're far and few between, and they're pretty rare. If you are if you're a reseller on Whatnot, you've given them your tax information, you don't have any special weird things going on, the majority of the time this is going to be 0. Don't worry about it. If it's not 0 and they withheld, I would try to understand why. But if you're in that category, if they are withholding for some reason, you probably already know why. Again, it's such in this example, it would be pretty rare you would know why. And then they're going to break it down. You have January through December. They're just breaking it down by month. Again, extra information, I really don't care. The only reason I would care about that is if what is in 1A is so far off, I might want to compare all the months' dollar amounts to my records to try to pinpoint where the problem may have been. So it just kind of helps you find if something's incorrect. I don't use this for my accounting purposes. I use my accounting records. So, but I do need to understand what's here just in case something doesn't add up or doesn't look correct to me. If you are in a state that has state income taxes, I'm in one. I hate it. I've lived in, there's only 5 or 7 states that don't have state income tax. If you are in a state that has state income tax, your state information should be listed there. And that is just so you have to file this with your state return also. And if they withheld any state withholding, again, if box 4 for federal is 0, box 8 should probably be 0 too. So kind of same concept applies. And that is the crux of your 1099. That is it. We go back to the fact of the 1099 is just Whatnot telling you how much money Whatnot thinks you made. And that's why I say I really don't, it's just not a huge deal. People get them and they get stressed out. Do you need it? Yeah, I wouldn't file my tax return until after I got it because I want to make sure that there's no huge discrepancies. If it's just a small discrepancy, it's probably just accounting on your side or theirs. Who cares about $20-30? I mean, I'm talking if it's hundreds or thousands, depending on your income level. If you only made $100 and Whatnot said you made $300, that $200 could be a big deal to you. If you made $50,000 and Whatnot said you made $50,200, that $200 probably isn't a big deal. So take it in proportion to what the income is and what you did for business. So that is a 1099-K. That's what it's going to look like. That's what you're going to get. You will report that. You're just going to pick the numbers up. When you fill out your Schedule C, if you are doing your own tax return, probably you're going to be using one of the, either Free Tax USA. By the way, that's the one I recommend because it's free. Tax Act, TurboTax, QuickBooks for Tax. There's a bunch of them out there. If you're using one of those, just about every single one of those tax programs will guide you through. They'll ask you a question. Did you get a 1099K? Did you perform any business? Are you a sole proprietor? They're going to ask you these questions. Love Free Tax USA. Absolutely. Look, I'm just a user. I know nobody in that company, but I have used Free Tax USA personally as a CPA for years. Totally with B. Haynes on that. It's a great software. I trust it to do mine. And my kids, they come to me. I have 3 kids. One of them insists on doing his own tax return, and he'll call me up and wants me on the phone with him, but he does his own. I love it. The other 2, the girls, they're like, here, Mom, here's my stuff, do my taxes. But I use Free Tax. That's what I use. Again, I'm not sponsored by them. That's just my own personal experience. But you're just going to take those numbers. They're going to walk you through that process, and you answer those questions, and you fill out the tax returns. Now, if you're going to give this, if you have a CPA, you just gather all these together, gather up your information. I would check it first, make sure it's good. Your CPA is going to check it too. They're going to check your 1099s against what you give them as revenue. But I would do that first, because what I want to give them, I don't want them coming back to me asking me a bunch of questions. So check them, give them to your CPA, and that's all there is to it. No reason to stress about them, no reason to be worrisome over a 1099K. Let's talk about some myths of 1099Ks. And I got these. So I went right onto the IRS website, which is my source of 99% of the information that I bring to you. Went right onto their website, and they had this really cool little flyer, and it was talking about myths of 1099Ks. And I wrote down 3 of them that I thought may be common. So the first one is, if I don't get a 1099K, I don't have to report the income. We kind of already touched on this. False. Just because they don't send you a 1099K does not relieve you of your tax responsibility. Let's see, the second myth, I won't get a 1099K if I made less than $5,000. Again, not necessarily true. They have a number of transaction thresholds. You may get it because there's a number of transactions you've reached, so maybe you only made $3,000 and Whatnot still issued you a 1099K. All right, just put it with your tax return. It's okay, no big deal. Maybe Whatnot clicked an incorrect button and sent everybody a 1099K. Okay, no big deal. Just do your taxes. The third myth, I owe taxes for the amount reported on the 1099K. Kind of. Keep in mind, what they report on the 1099K is gross. If you have 0 expense to offset that revenue, that gross income, yeah, you're going to owe taxes on that amount. But that's not the reality. The reality is there's an expense to doing business, right? You had to buy the stuff you sold. You got to pay for the power. You buy the equipment. You have a phone. You pay for your internet service. You pay for shipping supplies. On and on and on and on, right? So you take that gross amount, which really I wouldn't go solely off the 1099K, but your gross amount of revenue minus your expenses. So those are the myths. There's a couple of more that the IRS listed, but I didn't write them down. I didn't think they were like that mind-blowing of myths to write down. Let's see. What do you do if you have a question on your 1099K? Again, we'll go back, contact Whatnot or whatever online platform that you're using. So let's see. Where are we on time? Oh, we're getting close. I got a few more things to talk about. All right. I'm going to keep watching for questions. So if there's any more questions, feel free to throw them in there in the chat, and I will answer them to the best of my ability. But last month, if you were joining us last month, we talked about home office expense. And yes, you can take your home office as an expense if that home office is primarily used for the source of your business. So there's a few special rules, but keep in mind, primarily used for that business. You have a spare bedroom. You kids gone off to college, you've turned their bedroom into your Whatnot room. Take the square footage of that room. That's the expense you can use. So based off of either what you're paying for rent or what you're paying for mortgage, you can use the value of that square footage. You can apply it against the electric bill that you have each month or the gas bill, depending on how you power and heat that room. So what area that you use exclusively primarily for that business. Now, that doesn't mean that your kid can't come in and do homework on the floor while you're running your whatnot show. That's okay. It's logic, primarily used for business. So we were talking about that, and I was saying what I have done, because it doesn't have to be like a full bedroom, a full room. It's an area in your house, right? Doesn't even have to have doors. It's an area in your room, or in your home. So using myself again as an example, I have most of my basement is finished. We have partitioned off, and you don't have to have a partition. I do it just for sound purposes to keep an echo out. We have partitioned off a piece of our basement, and this is my whatnot room. Because it doesn't have 4 walls, I can still measure the square footage used in my business. So we're going to show you, and last month we were going to do, my husband was like, oh, let's show them the room. And I'm like, yeah, it's a little bit not ready yet. It's still a mess because I had 2 shows yesterday. Last 2 days I've had shows. So I have inventory around on my shelves. But we're going to do just like a quick little spin around, and you can see, just get an idea. This is my whatnot room. This is just a portion of my basement. And it is about 10 by 15 maybe. You can see that's the bathroom. I don't claim the bathroom because that is our guest bathroom. But we have some shelves. We have me back here. Hi, I'm over here. We have over there where my husband sits with all his equipment. And we have a curtain that I have attached to the ceiling to partition off my room. That's it. That's my whatnot room. It's a piece of my basement. So I measure this and I use that as my home expense. So I just kind of wanted to, put that out there for you guys. I don't want you thinking, just because I don't have a separate bedroom or a specific, like whole room, do you have a piece of your dining room? Where do you store your inventory? Do you have maybe a 3 foot by 5 foot set of shelving that like right here on this space, that is all whatnot items, and that's where I store everything? What is it that you use? Now, if you're constantly moving your stuff from room to room to room, and you're doing shows in every room, and not that you can't do shows in every room, but if you don't really have a dedicated space, home office is going to be hard for you. But if you have a space, you can be creative about what that space entails. Now, I say that, but keep in mind, whatever that space is, be consistent with it. So if you have like a set of shelves on the wall that you keep all your inventory, that's kind of your spot for all of your business activity right there is your storage, your business storage. You can do that, but then, and then next month you move to a different spot and then a different spot. Or not next month, but next year and year after year, I would be careful about that. You just need to be able to explain it logically. Like, it needs to make sense. Picture yourself as the IRS agent coming in and saying, hey, I see you're claiming a home office expense here. Can you tell me about your home office expense? What are you going to be able to say? How do you answer that question? If you can logically defend that question and say, you know what, for a while I was using my second bedroom, and then I had a child move back home, so I moved it down to my basement. Now I use an area in my basement consistently. That's my whatnot area. Or you're going to say, I have a shelf, but I move it. Let's see, in January it was in my bedroom, February it was over here. There, maybe March I moved it to the dining room because of this purpose. The IRS is going to say, well, how did you calculate square footage? How did you come up with that number? So it's not like rocket science. It's not like, oh, the IRS is out to get you. Just be logical about it. Just think it through. Put yourself in the IRS shoes and say, okay, how do you ask that? To claim all of this, do I have to file a separate business income tax return? File with husband right now, not a seller yet. No. Well, no, it's not a separate business return. Because you're not incorporated as a business, you are not incorporated as a multi-member LLC, S-Corp, corporation. Because it's you and your husband filing a return, this is what's called a Schedule C. It's just another piece of paper that attaches to your personal return. That's all it is. If you're using any of the tax software that's out there, you just let them know. They will ask you, all this tax software asks you, it says, do you run a business, or do you file as a sole proprietor? Do you have a Schedule C? And then you just put yes in there. So it's just another piece of paper that's attached to your tax return. That's all there is. I filed a joint with my husband, and we both file our 1099s. There you go. So that's it. And now you could have multiple Schedule Cs on one tax return. You can have one, or you can have more than one. depending on if you have more than one business. So I'm trying to read the name. Nature's a State of High. Cool name. I don't know your circumstances, but let's assume that you and your husband have different businesses. I'm just pulling examples out. If your husband has his own reselling business and you have yours, and they're really two separate things, you would put two separate Schedule C's on there and report it separately. Now, me and my husband, we're Zoe's Treasures. We do this as a jointly. I put one Schedule C because this is just this. We have one like selling account that we sell out of, and it's not really selling account. Like you don't do one for eBay, one for whatnot, one for Etsy. Zoe's Treasures as a whole does all of those. But if my husband had his own, like I do vintage decor. If my husband did coins, maybe that's a completely separate like business. Then you can have more than one Schedule C. If I inherited a home, can I use one of the rooms in that home, utilities in it, until we rent the property? Yes, you can, because even if you inherited a home, there's expense to that home. Maybe you're not paying mortgage, I don't know, but there's still expenses. You still have, so you have like internet, you have like what you said, electric, heat. Maybe you don't have, because it's inherited, there's obviously no rent. Maybe you don't have a mortgage, so you don't have those expenses, but you have other legitimate expenses in order to use that as your home office. And see, something like that, when I say it may change, like, so you may use a portion of that home for your whatnot business for 6 months or so, and then you rent it out and you move your whatnot business somewhere else. That's okay. That's easy to explain. When I'm talking about like being careful on your home office is when it's constantly moving from room to room and you don't really have a designated space. All right. So we showed you our little space. We've talked a little bit about home office expense. So one of the things, I think it was like back in October and November, I said, this year is going to be full of challenges. I'm going to try to come up with a challenge each month. And I'm never going to check your progress. I'm not going to hold you accountable. We're all adults. We hold ourselves accountable. But I'm just putting some stuff out there for you to think about. So I have 2 items for you to think about over the course of the next month. And I do this too. This is how I operate. This is how my mind works. I challenge myself. So the first one is to get your expense records together. We're in tax season time. We need to really know what we did last year. I'm always going to tell you should be doing your accounting on a regular basis. I don't care what regular looks like. Whatever works for you, daily, weekly, monthly, you need to figure out what works for you. Because if you create some complicated system and it doesn't fit into your real life, you're going to be sitting there at the end of the year with no accounting records. But if you say, you know what? Every time I go somewhere, I'm going to keep a notebook in my car and write down my mileage on the notebook, or get one of the little apps. There's tons of apps out there on your phone. And once a week, I'm going to look at my expenses and enter them into whatever type of accounting system I'm using. Great. Find something that works for you. Quick question. Donations made to charities and thrift. They give receipt without any value, etc. We can't estimate value per donation. On personal tax returns, yes, you can estimate. They'll ask you what that value is based on. So if you're just donating household clothing items, you would just say thrift store value. So if I donate a bunch of shirts at my local Goodwill sell for like $2 a piece, I donate 10, my donation's worth about $20, whatever the going rate is for those. So yes, you could make up your own value. Actually, most thrift stores won't value them for you. It's kind of up to you to do. Some will, but it's very rare that they're going to value it for you. So the first challenge this month is just to get your accounting records in order. Make sure that for 2024, make sure that you're gathering everything. Look at all the different bank accounts you used, all the credit cards. Don't forget about your subscription fees. I use Vendo, I'm not sure how you say it. That's a subscription that I pay for. So don't forget about those ones that are maybe just automatic and you don't think about. Are there any services that you use, like apps on your phone to track mileage or whatever else in your business that are paid through like Apple Pay? Those are easy to miss. So just make sure you're looking at all of those expenses and gathering all that up. And then the second challenge is to get your mileage together. Would be hard pressed unless to say that you don't have an automobile. Unless you don't have a vehicle, you probably have mileage of some sort. Probably going to the post office, buying your stuff. There's something you did, going and buying shipping supplies. there's probably some mileage. I have a ton of mileage. It adds up quick. Now, this isn't dollars that you're spending. This isn't every time I go somewhere, I pay this money. But you put gas in your vehicle, you maintain your vehicle. And this is a way to get some of that back for the business. So it adds up, and it adds up very quickly. And mileage can be, and I've got to be careful with how I say this, mileage can be a great way to reduce your overall taxable income. So let's just talk about that really quick. You have your revenue, total 100% of that revenue. Then you take all your expenses and you subtract all those expenses from that revenue, and you get to your net profit. Okay? Your net profit's what you're taxed on. That mileage expense is one of those expenses. Now, just because I didn't put money out there, like physical money for something, doesn't mean it's not an expense. What it does, it's kind of like this intangible that sits out there, that if I didn't use the mileage, say I'm using easy numbers, I had $10,000 in revenue, $7,000 of expenses, my net is $3,000. My taxable income then for that business is $3,000. Or I put the mileage in, maybe I have $2,000 worth of mileage expenses. Now my taxable income is only $1,000. When you're looking at a 28% tax rate, you may be in a lower tax bracket, but 28 is close to the top there. That's a significant amount of tax savings on $2,000. And I'm using very low numbers. I mean, the more you make, the bigger these numbers become. So don't forget your mileage. So my challenge to you is to look at your mileage. One of you may be sitting out there thinking, what if I didn't keep mileage? Oh my gosh, I didn't keep my mileage logs, and I know I drove all over the place. Recreate it. Recreate it to the best of your ability, being as honest. Are you going to miss some stuff? Yeah, that's life. You learned. Now do better this year. That's all there is. It's not the end of the world. How can you recreate it? You have receipts, right? You have receipts from auctions, Goodwill, wherever you bought your stuff. Okay, start there. If I have a Goodwill receipt for June 4th of 2024, that means I had to drive there to get it. Okay, I know that's one business trip. Recreate it the best you can. Use your mileage. All right, we're getting close to an hour. What is the rate? Good question. You want to look up the rate for me real quick? You want to Google that? I want to say 63 cents. We looked it up 2 months ago. I don't know. Let's see if I have it in my notes. My husband's Googling it real quick. They change it every year. How much? 67 cents. 67 cents a mile. That's pretty good. 67 cents a mile. I drove thousands of miles last year. I mean, I live in the middle of the country, so to get anywhere, I'm driving 20 miles just to go anywhere. So it adds up really quick. And it's a good way to reduce the amount you're paying taxes on in a very legal and legitimate manner. Be as honest as you possibly can be with that mileage log. Speaking of mileage logs, keep one. If by chance you are ever audited, that is something they may ask to see. They may not, but I wouldn't chance it, especially if you drive a lot of miles like I do. Keep a log. How can you keep a log? There's apps, there's pen and paper, there's a spreadsheet. Come home, put it on a spreadsheet, whatever works for you. The IRS doesn't care what form it's in, as long as it's documented, as long as that mileage is documented. What do you need to keep? The date, the total miles, and the business purpose. Those are the three main things you need to keep. So whatever date it is, today is what, the 19th, January 19th, 2025, 26 miles, picked up inventory, purchased inventory. There you go. If you want to list where you went, just for your own purposes, that's fine. So keep a log. Speaking of logs and just apps real quick. So in past shows, I've talked about how do you do your accounting. Use whatever system works for you. Like I was talking about time frames of doing it. But then as far as accounting applications, there's all kinds of them out there. Use what works for you. Use the KISS method. Keep it simple, stupid. There's no reason to overcomplicate your accounting. A simple spreadsheet, a little book, a pad of paper that you consistently log everything in. Or there's accounting programs out there. Up until this year, I've used Excel. I have just switched at the beginning of this year to using QuickBooks. And I'm going to talk a little bit about it because I'm going to kind of review it over the course of this year and give you updates. So I've used Excel in the past. My business was small. I started in January 2024 as a reseller doing business. I've resold stuff before that, but really as my business, I started in January 1st, 2024. So I used Excel. I wasn't sure I was going to keep this up. 2024 is really my test year. And coming into 2025, I came up with some goals for myself, some ways I want to grow this business. And in order for me to grow this business, it's just myself and my husband. I need to have time to do that. So in order to free up time, one of my ways was to make my accounting even an easier way for me to use. And I started looking into it, and I decided I'm trying QuickBooks as my method to still take care of my accounting, but free up some of my time. So far I've been doing it since, we're on day 19. This is my first 19 days of using QuickBooks. Now, I have used QuickBooks as a CPA for multiple clients in the past, very familiar with the product, have never really had much complaints, not thrilled with the online version, but I'm old school. I like when it was on the desktop years and years ago. Anyways, have the online version. So far I like it. Two big things that I really like about it. It has a mileage feature built right in. So I open up my phone, I click track trip, and then I hit stop when I'm done. Automatically tracks my mileage. I love that. Makes it easy for me. Number two reason I like it so far, it will, I can just take a picture of my receipts and it'll pull it into my accounting records with very little effort from me. I have to change one or two things directing what account it goes to, make sure it captured the right expense. So far I'm liking it, just for the fact that it's made two things that I do on a regular basis easier for me and saves me time. Having said that, I do have to pay for the service, so it is another expense on my business, and we'll see how it goes. So at the end of this month, I'm going to do some reporting with it, see how to pull some numbers from it, just kind of play with it, and I'll report back next month on if I continue to still like it or if I'm finding good new features or what. But that's just one. There are tons of software out there. All right. I am going to leave you today with critical questions for a small business owner. We're in first month of 2025. I got these from the American Express website of all websites. I just happened to come across them and I'm like, these are good questions. I went through here and it made me start to think about my business. So I'm going to leave these with you. Some may apply, some may not. Take it as it is. But here's some questions for you. Number one, what problem does your business solve? Are you just one in a million? Or are you solving a problem? Think about that. I like to think I'm solving a problem of putting junk into landfills. Not really junk, but filling up landfills. I'm solving that problem. I'm preserving history with the items I sell. Number two, how does your business generate revenue? Are all your eggs in one basket? As one of the other Whatnot people, Green 13, don't know if you guys watch Jeremy on Green 13, he's one of my favorite. He says if you put all your eggs in one basket, you better be watching that basket. Or do you have multiple baskets? So how does your business generate revenue? What streams of revenue do you have? I do vintage decor, mainly breakable stuff. I do some kitschy things. And this year I'm introducing merchandise. I'm introducing t-shirts and branded items into my revenue. Number three, which parts of your business are not profitable? What's not working for you? What's not making you money? Should you really be spending time on those? It's up to you. Number four, is your cash flow positive each month? Are you making money each month? Now, are you bringing in more than you're putting out? Should kind of be the ultimate goal of business, right? If not, why? And what can you change to fix that? Oh, thank you, Holly.
Thank you.
Number five. What is your pricing strategy and why? What is your pricing? How do you price your items? And why did you pick that? What thought went into it? Did you just say, I'm going to make everything $5? Okay, that's fine. Why did you do that? Understanding your strategy, having a strategy, a pricing strategy. It doesn't have to be complex. It could be, you know what? Everything I buy, I'm going to mark it up twice of what I paid for. If I bought something for $4, I'm going to sell it for $8. That's my strategy. Okay. What's your strategy? So thinking through these business things to really understand your business. Number six, how effectively do your employees generate revenue? This may not be applicable to most of us. I don't have employees. But I can look at that and myself, how effectively, my husband's raising his hand. You're not my employee, honey. How effectively do employees generate revenue? I can switch that question and say, how effectively am I generating revenue? What am I doing? What can I do different? Number 7, what is your customer retention rate? How many customers come back to you? Show after show, or purchase from you. It's in whatnot. Go and take a look at your analytics. Go look at them. You can see what customers are doing. Is it a one and done? It's okay if your business is a one and done business, but is that what your intent is, or do you want customers coming back to you? Will your customers make referrals? Do you have people sharing your shows? Do you, go into a show and they're like, oh, hi, Bob. Hey, chat. Have you followed Bob's show? He's wonderful. So just to think about things like that. Number 9, who are your most valuable and most costly customers? What customers are buy from you, and maybe not the ones just buying from you, but the ones maybe they come in and just support your chat. The ones who mod for you, or who just put stuff in the chat and helps get that chat talking. Ones who show up in your numbers so that you don't look like you're there alone. Ones who offer moral support, and ones who buy from you. What about the opposite? What are your most costly customers? Who are the ones doing returns, refunds, complaining customers that cost you time, customers, they're out there. We all have them. I mean, it's reality. So kind of thinking about those, and what can you do? What can you do to encourage on the good side? What can you do to discourage on the bad side? And number 10, our final, just kind of critical question for business owners. Is your social media strategy effective? It's a social platform. That's what we're on. We're all here at social platform. Doesn't mean you have to do Instagram. I know TikTok's gone, but Instagram, whatever, Facebook. Do you have to do it? No, that's up to you. Does it fit within your business model? Or maybe it does. And if it does, or would it help your business? What is that strategy? I know this is an area my husband and myself are trying to grow. We do Instagram, YouTube, and I'm always trying to think to myself, I'm a little bit older. Look at me. You can tell I'm not 20-something. I don't come from the generation of, whipping out my phone and taking these videos. But we've been trying to figure out ways that fits with our style and the way that we work on how to utilize these platforms. So, but just because one person does it doesn't mean it's right for everybody. So think about it. With that, thank you so much for coming and hanging out with me today. I enjoy it. Any last questions, type them in. And also, if you have questions throughout the month, feel free to message me. I will answer you as fast as I possibly can, but message me. I got a couple last month, and it always makes me smile. I'm like, oh, they thought of me and asked me a question. So feel free. If you've joined late and want to see the rest of the show, this is up on YouTube. So all of our shows are there. My husband's putting it up there. We're Zoe's Treasures on YouTube. And other than that, we're going to go raid somebody. So my husband has a computer over there. I'm going to let him pick. See if we can just go find somebody in our, maybe another community show. Is there anybody else in community category? All right. I'm going to have to go over here to his computer and get the raid started, you guys. Thank you so much. Have a great weekend. Stay safe in this snowstorm. Let's see here.
Honey, what are you doing?
Nothing?
Bobby Dazzle. Thank you, guys.